Ed, thank you for being here with us this morning. Some pretty big calls from some pretty big banks. What is your base case scenario? Do any of those square with what you think is most likely to happen for the economy?
Well, with the realm of speculation, I think you're probably going to see wide ranges, wide forecasts as far as how deep the U.S. will contract. I think until we have further progress in understanding the spread of the virus, you're probably going to see the general consensus be it's going to be a short recession in the U.S. and that overall that the virus should peak possibly around April, possibly in the summer. And if it's beyond that, then you'll see further lower forecasts, I believe. But there is still optimism that this virus is going to have a historical similarity to past modern pandemics, and you're probably going to see it have a short lifespan. If that's the case, I think you're going to see just a very short recession here.
A short recession. How much damage gets done in the short term to the stock market? And should you just sit on the sidelines and wait it out, or put some money to work if you've got a long enough time horizon?
Well, if you're a passive investor, I think now is the time when you might want to start considering scaling in. If we take a look at just some of the recent moves, this is the fastest move into bear market territory. And while yesterday we were as 30% off the record highs for the S&P 500, you're probably going to see continued aggressive action by central banks, and there's now hope that you're going to see strong fiscal responses, not just in the U.S., but also in Germany and all over the world. And that's going to provide an overall larger punch bowl of stimulus that's going to prop up risky assets once we're beyond this virus. So I think you're probably going to see the risks remain to the downside, but if you're going to want to be a little bit have a little bit of structure in getting back into the markets, you're going to probably see investors just focus on these key thresholds. If we retest the 2019 lows, I think that's going to be a key one that people will start to scale in. But ultimately, you're probably going to see people focus on a 30% decline, 35, 40, before you start to see much more passive investors getting into this. For the active investors, you're going to probably see them just kind of still trade headline to headline. And there's probably still a lot more risks to the downside, especially now that we're starting to see some countries impose short selling bans, which typically means you're going to see other regions get hit harder. So I think the volatility is going to remain probably for a fourth, fifth week before we start to see things settle down.